Hi, my name's David Belle, and I'm the author of the Macrodesiac newsletter and Macro Trader. And today I just want to talk to you a little bit about gold. Now, the chart in front of you is of gold futures, and we can see that recently we've had a relatively large and quite a volatile move to the upside from about the 1350 resistance, which started forming in mid 2013. Now, the primary reason for this, in my view, is because we're looking actually at a deflation rather than a traditional inflation hedge. And I'll talk about this a little bit by looking at the next chart. And this next chart is of the dollar yuan. And I've been saying since the start of the year, and actually from Q4 last year, that if the 7 level on yuan breaks, on dollar yuan breaks, then we're going to see deflation exported. Obviously, China is a massive exporter, so if their currency is cheaper, it becomes cheaper to buy all of the goods that they make, and so we get deflation, or possibly stagflation, if you want to put it that way. Maybe deflation hasn't been proven yet. But one of the trades that you can probably be in here is long gold in yuan terms. So looking at gold as a trade in terms of how the Chinese currency is doing. And we can look at this in the next chart. So we've seen previously that gold futures have broken out above that 1315 level. But in yuan terms, you know, we're still pushing up against that 220 resistance level. And the market's not followed yet, even though both charts look pretty much the same at the same point. So what we have to recognize here is what is actually going on. Now, in my view, we've got two things going on. We've got the deflation element occurring, but we've also got the massive risk-off sentiment that's occurring across the globe as well. If we look at Southeast Asia and Germany, for example, their export bases have collapsed recently, and the industrial production numbers are not very good. I mean, the PMIs coming from the manufacturers are pretty awful. And it does look to me as if we are facing a downturn. We've got the US yield curve, 72 to 73% of the US yield curve being inverted. We've had an increase of $980 billion of negatively yielding debt since just the start of this year. So it does look to me as if we are facing a massive issue coming forward. And another thing that we can look at here is actually if the dollar does increase more and more. And obviously that will affect the yuan and our trade of gold in yuan terms. But that's it for today. Join me next time and we can speak more macro. Cheers. Have a great day.